Welcome to the deep dive. Today, we're pulling back the curtain on an asset class that's absolutely fundamental to the digital world we navigate every single day. Yet it often operates entirely behind the scenes. We're talking about the tangible heart of our online lives, data centers.
That's right.
And we're diving into how you, as an investor, could potentially participate through a very specific type of investment vehicle, real estate investment trusts, or REITs.
Exactly. And for this deep dive, our focus narrows down quite a bit. We're looking at INETREIT, a real estate investment trust based in Thailand.
Okay.
And what makes INETREIT genuinely unique, and why we're exploring it today, is its pretty groundbreaking approach to providing passive income through digital infrastructure.
Right. So our mission for you today is to really unpack the core aspects of INETREIT. What exactly does it invest in? How has it performed? And crucially, what makes it stand out in, a pretty crowded investment landscape?
Yeah, we'll be drawing insights from a comprehensive equity analysis report and several insightful articles you've shared, looking at market trends, the financials, even a peek into its long-term strategy.
Okay, sounds good. Let's get started. So it's clear data centers are the backbone of our digital existence.
Yeah.
But let's maybe demystify where all this digital magic physically happens. We hear about AI, cloud computing, big data constantly. But what is a data center at its core?
Well, think of them as the high-security, ultra-reliable nerve centers. It's where every AI calculation, every cloud transaction, every bit of big data physically resides and gets processed.
Okay.
Around the clock, 24/7. These are massive physical infrastructures just packed with critical computing and networking equipment.
Right.
They need to be incredibly stable, super secure, and operate without interruption to handle the just immense flow of data. They are, quite literally, the physical bedrock of our digital lives.
The physical bedrock. I like that. And what's fascinating here is how different countries are positioning themselves. Why is Thailand specifically becoming such a significant player? It seems like it's attracting a lot of global attention for data center investment right now.
Yeah, and here's where it gets really interesting. Thailand isn't just another emerging market here. It's strategically positioning itself as a key digital hub in ASEAN.
ASEAN, okay.
The market there was valued at roughly 56 billion Thai Baht in 2024. But the projection is, well, it's pretty remarkable. It's expected to almost double.
Double?
Yeah, to nearly 115 billion Thai Baht by 2030. That's a compound annual growth rate, or HIGRIR, of about 12.66% per year.
Wow.
So this isn't just growth, it's like explosive expansion.
That's a truly remarkable growth projection. So what are the main forces fueling this kind of rapid expansion and making Thailand so attractive for this critical infrastructure?
Well, there are several powerful factors really converging. Firstly, its strategic location. It's right at the heart of ASEAN. That makes it an easy digital link to the CLMVT group. Cambodia, Laos, Myanmar, Vietnam, and Thailand itself.
Right, a big economic bloc.
Exactly. It's not just a list of countries. It represents a massive, interconnected economic area. So for data centers, this means a huge potential customer base, over 246 million people, but also the ability to act as a crucial digital bridge across Southeast Asia.
Okay, location. What else?
Secondly, there's robust infrastructure. We're talking stable, reliable power, which is critical for data centers, a growing focus on clean energy, plus widespread high-speed internet and 5G.
Got it.
And finally, strong government support. This comes through really forward-thinking policies like the Cloud First policy and the INET Thailand vision.
Right. Are those just buzzwords or is there substance?
No, they aren't just rhetoric. They offer tangible incentives. Things like BOI, that's Board of Investment Tax Exemptions.
Ah, so real savings.
Yeah, significant tax savings directly boosting profitability. And things like visa facilitation for skilled tech personnel. It makes it a very welcoming environment for this kind of investment.
That's a powerful combination: location, infrastructure, government backing. So for you, our listener may be looking to invest in this burgeoning sector. How does INETREIT connect directly to this growth story in Thailand? Tell us, what specifically does INETREIT invest in?
Okay, so INETREIT is a trust that invests specifically in INET IDC3. That's a large-scale internet data center operated by INET Thailand Public Company Limited, or INET. Right now, it holds Phase 1 and part of Phase 2 of this really critical digital infrastructure located up in Saraburi. And this isn't just like a shell building. This data center offers comprehensive, high-demand services, co-location, cloud services, business continuity planning, the works.
Okay, so real operational assets. Now, beyond the typical REIT structure, what's the one feature that truly sets INET apart? especially for those seeking income?
Its absolute biggest differentiator, and this is quite unique, is its commitment to paying dividends monthly.
Monthly? Wow.
Yes, monthly. This is a pioneering move in Thailand. They started this in April 2025. It's a really significant shift from the typical quarterly or sometimes even annual dividend payments you see with other REITs or, traditional investments.
That's a big deal.
It is. This monthly payout isn't just a convenience. It kind of redefines passive income in the Thai REIT market. It potentially creates this highly attractive, predictable cash flow stream that's, frankly, rare to find.
That monthly dividend definitely sounds incredibly appealing. Consistent cash flow is what a lot of people are after. But who's the primary tenant for these data centers? And what does relying on a single major tenant mean for the trust's stability? Isn't that a significant concentration risk?
That's a very fair question, definitely something to look at. While relying on a single tenant can sometimes be seen as a risk, in this specific case, the main tenant is INET itself.
The operator, right?
Exactly. Operating under a long-term lease agreement that even includes an average 2% annual rent increase built in. Now, what mitigates the risk here is INET's profile. It's a leading Thai cloud and digital platform provider. They have over 6,000 private sector clients and, crucially, significant government backing. The government holds a 49% stake.
Nearly half.
Yeah. So this isn't just any tenant. It's built on a foundation of national strategic importance. It's almost like a backbone for the country's technological independence. That strong governmental tie and their market leadership provide a pretty robust layer of stability to the whole arrangement.
That context around INET's strategic importance is, that's crucial. We've painted a picture of INETREIT's unique structure and position. Now let's get into the hard numbers. How has this trust actually performed for investors, and what are their big strategic plays on the horizon?
Okay, numbers. INETREIT's net investment income has actually shown a pretty strong trend overall. It was about 300 million THB in 2021, grew to 323 million in 2022. There was a slight dip in 2023, down to 310 million, but then it saw a really significant leap in 2024, up to almost 436 million THB.
That's quite a jump back up.
It is. And it's not just about revenue. That rebound demonstrates the trust's resilience and its capacity for substantial growth. And you might notice sometimes that profit actually exceeds revenue.
How does that work?
Well, that's characteristic of REITs. It's often due to gains from asset revaluation. As the value of the physical data centers themselves increases over time on paper, that appreciation boosts their reported profits.
Okay. Even if rental income is steady.
Exactly. Combine that with their naturally low operating costs. It's mostly managing the building and contracts, and it creates a powerful financial model for the unit holders.
That's a great insight into how REITs function financially. And speaking of value, I understand their big strategic play moving forward involves a pretty significant shift from leasehold to freehold ownership. How impactful is this?
Yes, this is a major, potentially game-changing development. Think of it like upgrading from renting a house long-term to actually buying it outright.
Right, owning the land underneath.
Precisely. INET is in the process of acquiring the land from SCG, where INET IDC3 is located, that was anticipated back in Q3 2022. Following that, INETREIT plans to purchase INET IDC3 Phase 1 and the underlying land from INET, expected in Q1 2023.
So the trust itself becomes the owner?
Exactly. This conversion from leasehold to freehold means the trust will own the land and assets outright. That allows for, theoretically, an unlimited duration of returns. It significantly increases the asset value on the books and provides more stable, long-lasting income potential for unit holders.
Any concrete examples of that extension?
Yeah, for instance, the asset life for INET IDC3 Phase 1's lease, which originally ended in December 2088, is being extended out to December 2096. So that's a tangible extension of the income-generating period.
That tangible extension definitely adds long-term value. What's the financial impact of this conversion? What does it cost? And what's the upside for investors?
So the estimated capital expenditure for this freehold conversion is around 3 billion Thai baht.
Okay, substantial.
It is, and what's interesting is the expected value added. Analysts like Capricorn Securities estimated at about 0.47 Thai baht per share. That represents roughly a 3.6% upside to their target price at the time.
And how are they funding this? Debt? Equity?
It's a mix, but mostly equity. The plan was for about 77% equity and 23% debt. So a pretty balanced approach to financing this big strategic move.
Okay. And beyond this freehold conversion, are there plans for future asset injections into the trust? What does the growth pipeline look like? Is this a one-off, or is there more to come?
No, definitely more planned. INETREIT is actively looking at injecting Phase 2 assets and potentially even a solar farm. Back in 2023 was the plan.
Solar farm, interesting.
Yeah, likely to power the data center, fits with the clean energy focus. And Phase 2 is particularly interesting because it features more high-tech equipment. That enables premium cloud services like Platform as a Service, PATLAS, and Software as a Service, SaaS.
So moving up the value chain.
Exactly, offering more sophisticated, higher-margin services. And what's more, INET also has the first right of refusal to invest in future phases of the data center development.
Ah, so they get first dibs.
Right. It provides a clear and sort of exclusive growth pipeline for the trust. They're not just hoping assets become available, they have a built-in path to acquire them.
Okay, so how do all these strategic moves, the freehold conversion, future asset injections, moving up the value chain, how does that translate into dividends for the unit holders? That's what many of our listeners are really keen to understand, right? The payout.
Absolutely. Let's look at some numbers from the report. For Q2 2022, the expected dividend per unit, or DPU, was 0.23 Thai Baht. That translated to about a 7.6% annualized dividend yield at the time.
Pretty solid yield.
Yeah. And interestingly, while initial normal profit estimates were slightly adjusted down by analysts for the 2022-2024 period, the DPU projection was actually revised up.
Oh.
Likely factoring in the positive impact of the new capital structure post-freehold conversion. With that new capital, the DPU was projected to be around 0.76166 Thai Baht per unit. That implies a payout ratio of approximately 88%.
88% payout. That's quite high for a REIT, isn't it? Very generous.
It is very generous, which is certainly attractive for income investors. And looking at performance, since its first trading day back in August 2021, INETREIT's stock price had risen an impressive 21% by the time of that report.
And how did that compare to the broader market?
It significantly outperformed the Thai stock market index, the SET, which only saw a 2.2% increase over the same period. So the total return, including dividends, was around 26.9%.
Impressive outperformance. And analyst views.
Well, Capricorn Securities, for example, maintained a buy recommendation with a target price of 13.15 Thai Baht set for mid-2023. So external validation there too.
Okay, given all this, the structure, the performance, the strategy, who is this particular investment vehicle really best suited for? And what are the broader considerations for you, our listener, if you're thinking about adding something like INETREIT to your portfolio?
Well, I'd say INETREIT is particularly well-suited for investors who are seeking stable, long-term passive income, especially given that unique monthly dividend payout structure we talked about.
Right, monthly income stream.
Exactly. It's also ideal if you're interested in directly investing in these big digital economy megatrends like AI and cloud infrastructure, but you don't want the hassle, the direct management burden of owning physical real estate yourself. You're essentially buying a piece of the digital backbone.
That makes sense. It's a way to play the trend without being a landlord. But how does this kind of REIT stack up against other, maybe more traditional investment options people pursue for income? Can we compare it directly?
Yeah, let's compare standard savings accounts right now. Well, they offer a pretty modest 0.5% to maybe 1.5% interest. Money market funds might get you around 2-3%.
Not much keeping up with inflation there.
Not really, no. Now, direct real estate investment, like buying a condo to rent out, that can yield maybe 5-7%, sometimes more. But as you can imagine, it comes with significant management headaches.
Oh yeah. Tenants, maintenance, taxes.
Exactly. Finding tenants, repairs, void periods, property taxes, all that. INETREIT, however, based on its historical performance and projections at the time, was delivering an average dividend yield of up to 8% per year.
Okay, so potentially higher yield.
Yes, clearly offering a potentially higher return than traditional savings and money market funds. Generally considered a lower risk profile than putting all your money into a single direct stock investment. And crucially, none of the asset management responsibilities of owning physical property. You just hold the units.
That 8% yield is definitely attractive. However, every investment comes with risks. We have to talk about those. What are the key factors that could put pressure on that yield going forward? Or are there any external market forces that could impact INETREIT?
Indeed, absolutely. Key risks include, first, the general business risks associated with INET itself. Since they're the primary tenant, any unforeseen downturn in their operations could impact the trust.
Makes sense. Tenant risk.
Right. Rising bond yields are also a factor to watch. When yields on safer fixed income alternatives like government bonds go up, they can become more attractive by comparison, potentially drawing investor capital away from REITs like this one.
So relative attractiveness changes.
Exactly. There's also the risk of increased competition. The cloud service market is expanding rapidly, but that means more players, which could eventually impact INET's pricing power or market share.
Competition heating up.
And finally, something specific to INET. The expiry of INET's lockup period, which was set for 2029. That's when original investors or founders are legally allowed to sell their shares. Sometimes this can introduce a bit of market volatility if a large block of shares hits the market, depending on how the company manages it.
Okay, those are important risks to consider. Given these potential challenges, though, what's fascinating here is how INET's core identity, its sort of DNA, as you put it earlier, might help them navigate these things.
Yeah.
What really makes INET stand out?
Yeah, this is where it gets quite interesting, beyond just the numbers. What's truly fascinating is INET's core identity, and you could say its DNA. This wasn't a company founded purely for immediate profit maximization.
Oh, what was the driver then?
It was established with a much longer-term mission to develop Thailand's technological independence. They really act as a research-oriented organization. They consistently invest in R&D specifically to avoid vendor lock-in to foreign technologies.
Meaning they build their own stuff.
Yes, they focus on building their own solutions rather than relying solely on, say, big global cloud providers. They even aim to grow their programmer team significantly from 1,200 to 2,000 and are creating their own comprehensive training programs to help address the national skill gap in tech.
Wow, that's a deep commitment.
It is, and remember that significant government stake, 49%. Combine that with a philosophy deeply rooted in sustainability and national benefit. INET's long-term vision, which is demonstrated by their, 29 years of consistent leadership in the Thai internet space, that helps to mitigate some of the inherent risks we just discussed. It's a deep, almost foundational commitment to the country's digital future, not just quarterly earnings.
That's a powerful point about their commitment and their unique position. It adds a layer beyond just the financials. And just for anyone doing the math at home, we saw a social media example floating around that highlighted, theoretically, that a portfolio of approximately 4.6 million Thai Baht in INETREIT could generate about 30,000 Thai Baht in monthly dividends. That seems to align with that 7.88% yield range we've been discussing.
Yeah, that math lines up with the target yield, although it's important to note while an 8% yield might have been highlighted as, say, guaranteed for the first year for some specific initial offerings or promotions when the fund launched.
Right, initial offers.
Exactly. The overall long-term returns will naturally, like any investment, depend on ongoing performance and prevailing market conditions. You can't guarantee future yields indefinitely. However, that strategic move to freehold ownership we discussed, coupled with a long 30-year concession for new assets being injected, that clearly positions the trust for enduring returns and aims for that long-term stability and consistent income generation.
Okay, so we've taken quite a deep dive into INETREIT today. We discovered how it offers this unique blend of essential technological infrastructure, a really pioneering monthly dividend payout, and a powerful long-term strategic vision, all anchored in Thailand's rapidly expanding digital economy.
Absolutely. I think this deep dive really highlights just how essential data centers are becoming to, well, everything we do online. And it shows how innovative investment vehicles like INETREIT are emerging to allow you, the investor, to participate directly in this fundamental and, frankly, crucial growth of the digital world.
So, as the world continues its rapid digital transformation, fueled constantly by AI, by cloud computing, here's a final thought for you to consider. How might this seemingly abstract world of data centers become an even more tangible, more accessible source of passive income for savvy investors in the years to come? Could it fundamentally change how we think about real estate investing in this digital age?